All right, welcome in to our weekly stock market update. Another volatility-packed week, news-packed week, and never a dull moment here in the stock market. So we're looking at a monthly chart. Let's actually look at the weekly heat map here. Pretty red, and you're seeing a lot of red in the financials up here, and you're seeing a lot of red in the retail trade, and we've already seen weakness in the technology sectors. But this week, it was definitely the financials and the retail trade, consumer services that got hit pretty hard, as well as technology continues to bleed out. But healthcare holding up pretty well, and you've got some of the industrial names looking okay. But overall, it was still a pretty red week. Now let's go ahead and look at some of the charts. The S&P 500 is down just about 6%. What did it get to on its lows? Almost 8% on its lows this morning. We're seeing a trend of a pretty red opening, and then we kind of recover throughout the day. But we've had plenty of days where it's just moving up and down percents at a time throughout the day. Just a lot of movement, a lot of volatility. So that's the S&P. We're not quite to a correction. 10% is a correction, which the Nasdaq is in a correction. We were down 11% at its lows this morning. And I think we're probably still, we're just outside of a correction. So we're down about 9.5% currently after the bounce this afternoon. But we are seeing quite a bit of weakness here. We're at an important trend line on the Nasdaq. Hopefully we can hold up here. But I'm just seeing a lot of aggressive selling and very weak bounces. I'm watching this market probably 4 hours a day, and I'm just seeing anytime there's a little bounce, we just get sold off even more. There is no rally that is being held. So hopefully next week we get a little relief rally, and we'll see if we get some follow through. Not financial advice. My plan is if we get a relief rally, I'm going to lay out some covered calls on my stock. So I've had covered calls on my stock. During the sell-off, you're able to profit on those calls to add to your cash position. And now I'm waiting for the next bounce so I can lay out my next tranche of covered calls. And then from there, if the market does pull back again, I will be able to profit off of that and have a little bit more cash to go buy the dip. So Nasdaq, S&P, looked at that. Oil had a big drop this week, got down to 65, so that's good to see. Gold had a very strong week this week after the recovery from last week's sell-off. And let's look at Bitcoin. Had a crazy week. We had a huge pump on Sunday, followed by a huge dump on Monday, and we've just been going all over the place in between. So a lot of volatility there. Now, when we look at the interest rates, they had a really nice week last week. They started off pretty strong this week, continuing to fall, but the last couple days we started to creep back up. So very interesting what happens next week, the next couple of weeks with interest rates. Are we going to continue to climb back up, or is this finally going to drop and break this trend line and make its way towards the three handle when it comes to the 10-year yield? So I'm hoping we can keep dropping on the interest rates. That's the most important thing I'm looking at right now, is going to be that 10-year yield. We're seeing mortgage rates come down, which is great. Let's take a quick look at a couple of names. So Tesla's getting destroyed here. My chart is all marked up, so you can disregard a lot of this. But we are down to 260. It got as low as 250 this week. I still think we get down here into the 220s. But it wouldn't be out of the realm of possibilities to get a little bounce back up, maybe to 280, before it fails that bounce and goes back down again. So any bounce we get in Tesla, I'll be looking to sell some more covered calls. I believe all my covered calls are closed out, so I'm going to be deleting these. Amazon under 200 bucks, strong dip buy this morning, got as low as 192. So we'll see here. Now, if there's continued weakness in the market, wouldn't surprise me to see Amazon in the 180s, maybe high 170s. Google had a pretty flat week this week, not doing a whole lot. And let's take a look at Nvidia. Just no real bounce, just a continual slow bleed here. I feel like it wants to get under $100. Again, the more you zoom out, getting to $100 doesn't seem that crazy. Wouldn't surprise me. We kind of chop along here. Be real concerning if we get below, $90, $80. Real concerning. Now this chart looks terrible, and this is the chart that really scares me, is the SMH, the semiconductors. It feels like this trade is breaking down, and there needs to be a little bit of, there's going to be a little bit of this before it makes its way back up. So to me, this is what concerns me when it comes to the Nasdaq. Now the S&P is holding up stronger than the Nasdaq because it's more diversified. The Nasdaq has less names in it, and it's all the same sector. So you can see when we look at the heat map, there's a rotation going on. It's leaving technologies and financial, and it's going to other sectors. The S&P is going to be a stronger index than the Nasdaq because more money is flowing out of the Nasdaq and going into some other companies that are in the S&P that are industrials, transports, different than just technology. So this trade looks like it looks tired, and Nvidia did great on their earnings. Broadcom had great earnings. But the rest of the chip names, they look weak, and people look like they are in profit-taking mode. So I think that's all I got for individual names. The Qs looking pretty weak here. Again, this is basically the Nasdaq 100. So hopefully we get a little bounce here. I didn't buy any this week. I will probably start buying if we get into the 170, maybe 175. I will set an order for some at 175. If we can get there. If not, no worries. There's other names. There's individual names I can buy right now. This week I did buy a little bit of Nvidia, just a little bit. I'm still not an aggressive buyer here. I'm still just nibbling a little bit to take advantage of the 10% pullback. But I'm buying so little that it doesn't really make a difference in my cash position, in my stock position. It's just so I can do something in this dip. But I'm really going to be aggressive if we get another 5 to 10% pullback. 10% for sure I'm buying, but if we can get another 3 to 5% pullback, then I'll start to really make some aggressive moves. I did buy a little bit of Amazon, and I do have a couple more positions that I purchased this week. I did start a small position in Chipotle, and I also started a small position in Costco. Costco had their earnings, and they were free falling this morning, so I bought a little bit of Costco. So I need to listen to their earnings call. I just blindly bought this because I've been waiting to buy it when it got under $1,000, and it got under $1,000. So those are a couple new positions. I am starting to get a bond position going as well. So the TLT, I'm building out a position here. I've traded this thing around in the past, and I'm starting to get a position here to get exposure to interest rates coming down, and that's about it. A couple other small ETFs, dividend ETFs that I added to the portfolio. Other than that, I didn't make any major moves. There are some things I'm continuing to look at, like Novo Nordisk. If we can get a rejection here and pull back down into the 80s, I will be looking at that. Palantir, I'm looking at, even though this still looks, I don't know what this could really drop further, or I could see this shooting back up, so I need to see some confirmation. Intel under $20. Again, the semi trade looks tired, it looks weak. So if the semis break down, I may be focused on the SMH and Nvidia, but I feel like I want to take a flyer on Intel, but I still need to do some more homework. Meta, wow, that was a lot of buying. I didn't know it got to $600. But under $600, I want to be involved in a little bit of Meta. And what was the other one? Robinhood, probably I'll stay away. Uber is interesting. I didn't realize that it got so cheap down here. So I feel like I missed this boat, and I want to get back. I've got an alert here if we can get back to $70. Other than that, not really looking at a whole lot else. So a pretty volatile week this week. Let's go ahead and pull up the economic calendar for next week. We did have Jerome Powell speak today. I listened to it. It wasn't anything the same. He's got the same speech. It's almost like he's a hologram at this point. He says the same things over and over. But we did get a lot of data this week. The jobs numbers all came in super weak. So you've got the ADP non-farm payroll, unemployment change came in a lot worse than expected. You've got manufacturing numbers, or the PMI came in better than expected. Unemployment claims came in a little better than expected. And then this morning, non-farm unemployment change came in worse than expected. And then they did have a jobs number revision from the past. That was a big revision again. So all these jobs numbers that are announced, a couple months later, they get revised to be, oh, those were actually way worse than expected. So the question is going to be, how bad are these numbers? Are these legitimate, or are they going to get revised down even more down the road? And then, like I said, you had Jerome Powell speak this week. He said the same old stuff. Next week, we're basically through earnings. CPI week next week. So that's going to be this is going to be big for interest rates, depending on how hot or how cold the inflation number is. That's going to move the rates around, and we do have some more jobs numbers. And then we've got another consumer sentiment data. So this is going to be an important week because the setup coming into this week is we've got a weakening economy, we've got a weakening labor market, and the expectation for inflation's kind of change by the minute depending on tariffs and economic data. Are we going to go into a recession that'll bring prices down, or are we going to have some crazy trade war that's going to shoot prices up? You could turn on two different channels. You can listen to two different people in 2 different hours, and you could hear conflicting opinions. So some of this data will give people a little bit more clarity on what their thoughts are, and will give the market a little bit more understanding on how they want to position. So that'll be an important week next week. Not a lot of earnings left. I'm basically done with earnings. There may be a name here and there, but that's about it. So that is all I got for this week. So stay tuned. Everyone stay safe, and zoom out when you're looking at the market and things are going up and down. To me, I get excited when we have this type of volatility, and I'm seeing opportunities for me to do stuff out there. Real quick, let's look at the VIX. So simple rule: if the VIX is high, it's time to buy something. That doesn't mean go all in, use margin and go crazy. But when the VIX has these spikes, this is when assets get dislocated in price, and it tends to quickly cool off and things come back to normal. So you may get a meta sub 600, but it may only happen for a couple of days, and then boom, it shoots back up. So just take this for food for thought. But when the VIX is high, it's time to buy. So maybe next week we get a pullback in the VIX. Maybe this weekend something crazy happens and we shoot up into this green zone. But for me, when we're in this green zone, this is when I need to be buying stuff. And when we're in this red zone, that means to me, that's when the market is complacent and I need to be looking to take risk off. So green means risk on. I need to be putting risk on no matter how nasty it feels based on the headlines and things going on. These are opportunities that the market is, things are going on in the market and there's opportunities. So this was, what was this? Was this this was that Japanese yen trade. Yeah. And then this was the pandemic. Yeah. So when you get these spikes in volatility, you want to take advantage. So we may be at the beginning of a larger spike, or this may be another spike like this. I don't know what this was. But anyways, that is the market update for this week. Sorry for rambling the last 5 minutes. Everyone enjoy your weekend, and I'll see you next week. Peace out.